Ever wondered how governments fund massive projects like wars, especially back when kings ruled? Let's travel back to 1694. King William III of England is in a serious bind. He's waging a costly war against France, and the royal treasury is completely empty. He desperately needs cash, but his options are running out. Traditional fundraising methods just aren't cutting it. This financial crisis sets the stage for a revolutionary idea that would change the world of finance forever. Just when things looked bleakest, a group of clever merchants and financiers stepped forward with a radical proposal. They said, "Your Majesty, we'll lend you £1.2 million at 8% interest." But there was a catch. In return, they wanted the right to establish a new kind of institution, a national bank. This wasn't just any bank, it would be the government's banker. They called it the Bank of England. This deal marked the birth of something we now take for granted: national debt. The loan wasn't just a personal debt of the king, it was the debt of the entire nation, guaranteed by future tax revenues. This concept was groundbreaking. To formalize this national debt, the government began issuing what we now call government bonds. Essentially, these were IOUs from the government to the people who lent it money. For the first time, ordinary citizens could invest in their country's future and earn a steady return. This created a stable and reliable source of funding for the state. The Bank of England was the engine driving this new system. It managed the government's accounts, handled the national debt, and provided the financial stability needed to win the war and build an empire. The model was so successful that it became the envy of the world. As the years went by, the Bank of England's power and influence grew exponentially. It was granted the exclusive right to print banknotes in England and Wales. This was a massive step. It meant the bank controlled the money supply, giving it the ability to influence interest rates and manage inflation. It evolved from being just the government as banker to becoming the guardian of the entire nation as financial system. It was the lender of last resort, stepping in to prevent financial panics and keep the economy from collapsing. This dual role of managing government debt and ensuring financial stability became its core mission. Nicknamed the Old Lady of Threadneedle Street after its historic location, the Bank of England didn't just transform Britain. It created the blueprint for modern central banking. Nations across the globe looked at its success and began establishing their own central banks. From the Banque de France to the U.S. Federal Reserve, the core principles managing national debt, issuing currency, and maintaining economic stability all started right there in 1694 as a desperate solution to a king's wartime money problems. So the next time you hear about a central bank changing interest rates, remember the old lady who started it all. Thanks for watching. If you found this journey through financial history interesting, don't forget to like this video and subscribe for more stories behind the systems that shape our world. See you in the next one.